All right, good evening, everybody. Testing 1 2 3. Testing 1 2 3. Do me a quick favor and type a T in the chat. Type a T in the chat if you can hear me and see my screen, please. Trader Al, Jerome, Robert, Scott, Cheatham. I don't know if I pronounced that correctly. Greg, Daniel, Keith, Richard, Alan. How's everybody doing today? How's everybody doing today? Everybody survived the wild west of the market. Yo, Bob. Market is dropping hard again here in the aftermarket, right? All right, give me 1 second, guys. I'm going to switch my slides over. We'll go ahead and get started here. All right, I'm back. If you can, just give me a quick shout out. Let me know you can see that slide there. Top tools for catching corrections in major moves. If so, if I get a minimum of one person saying yes, I'll consider that good enough for government work. All right, sounds good. Sound is in and out. All right, let me move my mic. All right, folks, we got a packed house today, and I want to go ahead. We're a couple minutes past the hour, so let's go ahead and get started. I don't want to waste anybody's time. I'm sure you're here because you want to see what this top tool is for catching corrections in major moves. Well, we have certainly had a nice little correction today, or nice depending on what side you were, but regardless, a pretty decent move here in the indices, as well as a lot of other markets. A lot of markets moving. Grains have just been absolutely on fire. Roaring to the upside, had a correction last week. It did flip back to the upside this week. So it's been pretty wild out there, and hope everybody is staying on the right side. I'm really excited about this presentation. My name is Silas Peters. I am the founder and head trader of Cecil Swing Trader, in case you were not aware of where you were or who you're listening to. And I want to say thank you for your time. Appreciate you being here. I realize everybody has commitments, a lot of places that they could be, whether that's doing something else, working, feeding the kids, whatever it is. Means a lot to me that you're willing to spend about 60 minutes or so of your day really in an effort to learn up and become a master at a high probability strategy that can help you take you to the next level. So that being said, I will want to preface this with saying, go ahead, answer or ask all of your questions during the presentation, provide your comments, feedback, so forth. I'm not ignoring anybody. I want to make sure I get through the entire presentation. I actually teach you the strategy so you can start using it tonight or in the European session, in the morning, New York session, however you want to do it. You will walk away with something you can start trading with, or at least practicing on immediately. So I'm very excited to show you that. Bev says no sound. This happens all the time. Let me make sure that the sound is good. And I'm going to type to Bev, try F5 or refreshing or logging out and logging back in. So if that happens to anybody, let me send that to old Bev. All right. Looks like, okay, there you are. She's back. He's back. All right, let's go ahead and get started, guys. Again, ask the questions as you wish. I'm going to get to the presentation, get to the strategy, then I'm going to come back at the end, answer everybody's questions. We'll take a look at what the market, what I'm going to teach you today, how it did in today's market environment, how it's doing today. We'll take a look at symbols and all that good stuff. All right, before we begin, we must always start with the risk disclaimer as required by the regulatory governing bodies and our authorities who require us to share. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. Trading is risky. You can lose money. So what this means, Cliff Notes version, don't trade with your rent money, your mortgage money, your milk money, your child's educational funds. Trading is risky. You can lose money in trading. Don't trade with money you can't afford to lose. That being said, we want to shut everything down, remove all distractions. That means closing browser tabs, logging out of Facebook, putting your phone on mute, turning C-SPAN on mute. We're going to be together for about 60 minutes or so. In recording, can never guarantee technology will cooperate properly, so make sure you listen closely, take good notes, and then ask your questions while you have me here on this live presentation, and I'll answer them at the end. Before we begin, let me formally introduce myself. My name is Silas Peters. I'm the founder and head trader of Seasonal Swing Trader. As I've already said, simply put, I'm a husband, father, son. I love hanging out in the fam, whether it be at the beach, on a boat, hiking, on a golf course. I'm in southern Alabama, LA, lower Alabama, on the Gulf Coast, on Mobile Bay. So I do love to get outside, enjoy the great outdoors when I can. I spend a lot of time working, a lot of time in front of the screens. So this is what is important to me and why I do what I do each and every day. And last time I did this, somebody called me out, made fun of my little mustache attempt there, if you will. And I'm still trying to grow that. But hey, we'll see if it comes off. I'm not sure. But that's me and my family just hanging out, just to show you that I am not a robot. I'm a real human being, just like you. But how did I get here? How did I get to where I have the privilege of speaking to you today? Well, in college, and for those that haven't quite put two and two together, this is my alma mater. I'm not rubbing that in anybody's faces here. This is my alma mater, the University of Alabama, Tuscaloosa. Sorry, Buckeyes. But while at school, I majored in investment finance and economics, but I had no idea where that was going to send or land me. Fortunately, one of my dad's golfing buddies used to be an ex-wheat trader in the grain pits of Chicago. And we were playing one day, and I had a chance to talk to him. He was asking me what I was doing, what my plans were. Of course, I had no idea, literally no idea. I thought I did, but I really didn't. And we started talking, and one thing led to another. And I heard his stories about Chicago, the pits, all that. Certainly new to me. And what I do? Well, I went back, I started doing some research on Chicago, the trading floors and trading, and I was immediately intrigued. I was enamored by all things Chicago and especially trading. Well, what happened next? Needless to say, I was a bit green on the sleeve when I sold my car 3 days after graduation. I rented a U-Haul and I drove straight north to my new digs in downtown Chicago. I drove straight here. I signed a lease at Marina City, these two honeycomb towers overlooking the beautiful Chicago River. I was directly, this is my unit right here, somewhere on the 23rd floor. My balcony was bigger than my unit. Smith and Walensky Steakhouse is right down here. Tried to go in there a couple times. I could barely afford one of the Fiji waters. Had House of Blues literally tucked in between these two buildings. It was part of this building here. And then I had Harry Carey's a block back. So just an amazing time for a recent grad from the University of Alabama. And actually the same day I moved in, I took the U-Haul truck back to its depot, hopped on an Amtrak, and I scalped a couple tickets to the US Open at Olympia Fields in Kohler, Wisconsin to chase Tiger Phil around. So as soon as I bought those tickets, the guy just disappeared with the blink of an eye, and I thought I was being taken by a market maker. But that was my first trade that I like to call while in Chicago. But back to my journey, or my career path, if you will. My first career, if you will call it, until this. And I want you to picture this. Remember, I was working the Asian, European, and early New York session trade desk. So if you remember me telling you I sold my car, well, this picture right here could literally be me walking to work around 6 p.m., maybe 2 a.m., where I got off early, maybe 6 a.m. But I remember on numerous occasions, me walking down the middle of LaSalle Street right here, nobody but me and a giant snowblower in the entire city of Chicago, looking up at the Board of Trade, the God of Grain series, walking into the Board of Trade, and the temperature reading a solid negative something degrees Fahrenheit. Look, I am from deep South Alabama. I know humidity. I do not know much below 40 degrees. So when we got here, I remember the teens. We got into the 20s. It was like a godsend of warmth. It was getting warm. So I did this right here for a few years, working at the Board of Trade. handling some serious trade size across the board of trade, Merck, NIBOT, NYMEX, and various London and Asian exchanges for our hedge fund. Also doing trading for banks and CTAs, trading everything from corn to copper to hogs, euro dollars, Japanese government bonds. Incredible learning experience, both with the markets and trading, as well as the Chicago big city life. A wonderful experience, but I then decided to head back south when some other opportunities opened up. And that's when I went truly corporate. I went from a fast-paced and somewhat stressful hedge fund trade desk to a more slower-paced life, managing equity and fixed income portfolios and other investment management roles in this glass building right here. But to me, this was extremely boring, but it was the safe route. But I missed the action and the excitement of the pits, the tape, the screens. So through some additional contacts, I was led to a day trading firm where I helped run operations, execution, trading education, to then running a couple brokerage firms, and then ultimately working in a private family office serving ultra high net worth individuals. So those were $10 million net worth or greater, doing a hodgepodge of all these things right here. So it's safe to say I've seen a lot of the spectrum in the finance world, but honestly, I was just not that happy. I still miss trading in the trading world, me sitting in an office, tied to a desk, looking out the window, and of course, dealing with typical corporate red tape was just not in my blood. I'm not a water cooler type of person. So I wanted to get back to the markets, to the charts, the trading. And while I was still trading during this time, I truly miss being in the weeds of the markets, following the charts, doing the analysis, and so on. So I left the corporate world and I started Seasonal Swing Trader. It's here where I publish research, ideas, and analysis to my followers, and it holds myself and our community accountable each and every day. But during this entire journey, it was not all rainbows and puppy dog toes, if they call it that. There were certainly some painful lessons to be learned. I grew accounts, blew accounts, grew accounts, blew accounts. I quickly learned that I was not a trading guide. I was not above the market. The market did not care about my position, and it certainly did not care about my opinion or what I thought it should do. And it takes a while for a newbie to understand that. So what does that mean? It meant blowing accounts, emotional trading, acting like a gunslinger, and poor risk management. But I attribute all that to battle scars. In this workshop, I'm going to attempt to help you think smart, think logical, with a proven price action strategy and plan, so you can avoid the many mistakes that I, and I'm sure several of you, have made. Let's talk about you. Why are you here? Well, you want to have a reliable pattern for all market conditions, have a strategy for all asset classes, and really to be agnostic of all market bias. In today's markets, it's imperative that we make certain that we have a strategy that can trade both ways. We want to employ strategies that can profit during up markets, down markets, and sideways markets, and do also without guessing. So today, I'm going to show you a pattern that results in trend reversals, the point where a trend is likely to reverse, a pattern with the least risk and highest reward. So if everybody wants to see that and see it now, let's keep moving. And I don't want to sit here and teach you a strategy that only works on a 1-minute Bitcoin chart or a weekly Facebook chart or a 4-hour crude chart. I want to show you a simple and straightforward strategy that works in any market, any condition, whether it's ranging, consolidation, contraction, expansion, low vol, high vol. I don't care if you're a tick trader, scalper, day trader, swing trader, or if you trade the underlying, call options, put options, debit spreads, credit spreads, reverse crouching, tiger, hidden dragons. I don't care. What I'm going to show you is powerful, and I'm going to prove it to you if you have patience to stick around. Before we continue, it's very important that we cover the process. Has anybody here heard of Jesse Livermore? Raise your hand. Have you heard of Jesse Livermore? If you haven't, I encourage you to read Reminiscences of a Stock Operator. If you get the chance to do so, head over to Amazon after the presentation. Probably get a copy for $5 or so. I'm going to actually research that and see what a copy is. I do have a used copy. Great read, especially if you're in the trading world, you want to treat trading seriously. Question I often receive is, what do you think about markets here, Silas? What do you think about this? What do you think about that? My response, I don't know, and I don't care. And I know that sounds a bit harsh. Maybe it sounds ill-informed, especially when you're asked by friends or family members or your in-laws over the holiday breaks, but it's true. For the most part, I really don't care about the daily news that flow in and out of the market. I am a trader that trades strategies based off probabilities. So we want to forget about market assumptions and only focus and trade with high probability strategies and what is actually in front of us. That means no more predicting. Successful traders possess three common traits. We must realize that knowing what is going on in the news and knowing how to make money consistently are two separate things. For successful traders, it's about your strategy, your logic, and your process. It doesn't matter what we think the market is going to do tomorrow. And I fully realize it's a difficult concept for maybe new traders to understand, and even seasoned traders or investors struggle with this. I certainly want to form my own opinions. It's just human nature, but it took years for me to figure that out. I found out that it doesn't pay for me to try to absorb every financial story out there or slap every indicator onto a chart. All I care about is when the markets I am following reach key criteria. But there is one more trait, and that's patience. Because we know, or I hope you know, that trades should not be forced. We know that a forced trade is not a statistically sound trade. We are in this for the long game, and patience is expected if we wish to bring in profits over the long term. Now, that probably sounds boring to the aggressive crowd out there, but I am more interested in the profitable trades, not trying to be a short-term hero who tries to trade every scenario out there. I am confident in trades that consist of key criteria that are setting up, and we are talking about extremely high probability trades. But patience is the key ingredient to the success of this strategy and probably really all strategies, and I can't emphasize that enough. So what is a high probability strategy? It's one that requires patience coupled with a disciplined approach. Waiting for the appropriate scenario to unfold with a high probability of success is what makes this strategy a success. It also recognizes that opportunities are made up easier than losses. So if we let a few pass us by, we don't dwell on what could have been. There's always going to be more opportunities around the corner. And then lastly, I realize that the less I trade, the better my strategy will likely perform over the long term. And the long term is what matters. And this likelihood is what makes this high probability strategy unique and successful. And then the takeaway, again, is patience pays. So, Silas, what indicators do I use to successfully trade these strategies? What's the secret sauce? What are the ingredients? I learned early on to keep it simple. We pick a few indicators and we try to follow them forever. I know many traders, too many traders, that want to follow Donchi channels, market profile, GAN, Bollinger Bands, fib retracements. The list goes on and on. This high probability strategy uses price action alone plus one very common and basic and free indicator, along with a couple pro tips to take advantage of sentiment and technical extremes. So who here has seen Jerry Maguire? Who here has seen Jerry Maguire? He was done in the 90s or something. Love it or hate it, that's a famous line. I'm not going to stand up on my desk and scream it like he does annoyingly in the movie. I can't show you the money because I don't know how you're going to trade, but I will show you the opportunity. So let's get to it. It is divergence. Wow, what a new concept, right? Of course not. This is nothing new. Who here has heard of divergence? Who here has heard of divergence? And before I get going, there's going to be some haters out there, people that will leave, say, no divergence, bye, peace out. No, I would challenge you to stick around and see how we use divergence in a unique manner. So for those that don't know what the heck it is, divergence is when the price of an asset is moving in the opposite direction of a technical indicator, such as an oscillator, or is moving contrary to other data. Divergence warns us that the current price trend may be weakening, and in some cases, may lead to the price changing direction. So basically, it's an indicator in price action being in disagreement using any relevant indicator, such as MACD, RSI. It's an indication of a reversal or a continuation, but more often a reversal. Divergence, let's talk about the details before we get into charts, can occur between the price of an asset and almost any technical or fundamental indicator. It's typically used by traders when the price is moving in the opposite direction of a technical indicator. Positive divergence, it occurs when the price is moving lower, but a technical indicator is moving higher or showing bullish signals. Negative divergence occurs when the price is moving higher, but a technical indicator is moving lower or showing bearish signals. Why is it important? Because it's the earliest indication of a reversal. It's a good sign to exit, a good sign to scale. It means that we're usually buying near the bottom or selling near the top. Hint, hint, this means that the risk on our trades are very small relative to your potential reward. Types of divergences, we have classic, sometimes called regular, and we have bullish and bearish. Bullish divergence is when price action makes a flat bottom or lower low and a higher low in the oscillator. Bearish divergence is when price action makes a flat top or higher high and lower high in the oscillator. Traders use divergence to assess the underlying momentum of the price of an asset and for assessing the likelihood of a price reversal. So we have the market making new highs. The RSI starts making lower highs. This is warning us that the price of the uptrend may be weakening. It's what we call negative divergence. Positive divergence is the opposite situation. Imagine the price of your stock making new lows while the RSI is making higher lows with each swing in the price. Traders may conclude that the lower lows in the price are losing its downward momentum and a trend reversal may soon follow. We also have what we call hidden divergences. Hidden bullish divergence is when price action is making higher lows, but lower lows on your oscillator, what we normally see in an uptrend. Hidden bullish divergence tells us that the oscillator is possibly recharging to go back up again, or it's a continuation of an uptrend. Hidden bearish divergence is when price action makes higher lows and higher highs on the oscillator. It's what we'd normally see in a downtrend. Hidden bearish divergence tells us that the oscillator is creating space to likely go back down or is the continuation of a downtrend. Let's look at some basic examples here. This is regular divergence. This is an example of regular bullish divergence. It's the most frequent and is usually considered a sign of a reversal. The price is making lower lows, but the oscillator is making higher lows. Now, we don't need a series of lower lows. We only need one low to be lower than the previous low. This can typically be found near bottoms. Hidden bullish divergence. Notice that this is a trend following type. If the price is making higher lows, low, higher low, but the oscillator is making lower lows, low, lower low, this can be seen when the price is in an uptrend and indicates that price may tend to go higher. Let's talk about regular bearish divergence. This is the most frequent. It's usually considered a sign of a trend reversal when the price is making higher highs, high, higher high, but the oscillator is making lower highs, high, lower high, can be found near tops. And then we have hidden bearish divergence, a trend following type. The price is making lower highs, high, lower high, but the oscillator is making higher highs, high, higher high. This can typically be seen when the price is in a downtrend and indicates that the price may continue its uptrend. Let's talk about identifying strength, and let's consider the following scheme here. So point one is when buyers believe that a trend has recovered or a new trend has begun, and simply put, they want to make money. So they're opening up long positions, buying the market, they're driving the price higher. Trend accelerates as more and more buyers are jumping into the market. The buyers here at point two start to take profits, the trend weakens. Buyers are still dominate, but they start to calm down because they're afraid that the trend is coming to an end. Then we get to point three. No more buyers in the market. The trend is likely to reverse. Sellers step in. They begin to dominate. Now, we can use tools to help recognize trend and trend strength, and one of those can be found with the popular RSI indicator. I believe the standard rule of thumb, if you will, is when the RSI rises above 70, the market's considered to be overbought. When the RSI falls below 30, the market's considered to be oversold. That's a great concept, but we want to use the RSI indicator in a slightly different way. Let's look at the same chart. Notice that there are two significant highs labeled A and B in the price chart, A and B, as well as in the corresponding highs in the RSI pane below, A and B. The price chart, we see that B is higher than A. That means that the price is still going higher. Now, RSI pane is just the opposite. B is lower than A. It means that the trend is weakened and is likely going to reverse. And lo and behold, what happened? The market actually reversed and it sold off hard. We've used the RSI in the previous example, but it can be replaced with any momentum indicator, such as CCI, stochastics, MACD. All these indicators are derived from price, so there's really no better or worse indicator. It's really about preference at the end of the day. It doesn't matter what indicator is your best friend. Every approach is equally good, but we want to get back and focus on what matters, and that's the divergence concept. So let's quickly recap for context before we take a deeper dive. Bullish divergence, we know, is when price makes two significant lows, but the second is lower. RSI is making two significant lows, but the second is higher. Bearish divergence, price makes two significant highs, but the second is higher. RSI is making two significant highs, but the second is lower. Now, let's talk about charts. So we previously defined the divergence as a discrepancy between price and indicator movement. Note we've now added the MACD to the chart. So when the price is making a new low, low, new low, but the MACD makes a higher low, low, higher low, we have bullish divergence. This is signaling that the trend is likely to reverse. Doesn't mean that it will, but it's likely. This is a classic or regular div pattern. So the black line on the price is sloping down. The black line on the MACD is sloping up. Now, deep divergence, the depth of the divergence is a bit of a subjective term. When you look at this example, you see two div patterns, a bullish and a bearish. The first one here is nice, but the second one does not look promising because of the two peaks or troughs on the MACD. They're not as significant. We consider a divergence to be deep if the MACD crosses the zero line. So such a divergence provides a much stronger signal for a trend reversal. On this chart, we see two patterns. The first example is almost a double bottom, if you will. The second example has more defined peaking action. When we peak, the MACD line crosses below the zero line, rises back up, forms a second peak, which is lower than the first, thus giving us our divergence pattern. And because it did cross the zero line, this means that we have a higher quality divergence pattern. Smart approaches, we know that the basics of divergence, let's look at ways we can approach them in a smart and methodical manner. As we've discovered, these div patterns can lead to consolidation, correction, or full trend reversals. That's great, but we need a definitive plan about where to enter, where to exit, and where to place stop losses. Because with this strategy, we can make quick profits on small corrections or minor trend reversals, or try and capture major market moves. And when the trend reverses, it's all traders' dreams or goals to try and stay with the trend for as long as possible. So we know that divergence is a reliable pattern, but this is what sometimes chart patterns see. Chart patterns see a double top. Chart pattern traders see a double top. Elliott wave traders may see a shortened fifth wave, but they all refer to the same thing, the divergence pattern. This is what chart pattern traders see. This is what Elliott wave traders see. This is what we see. Most traders don't realize that the MACD or RSI is exactly what they're looking for. Our approach removes the subjectivity because the div pattern is well defined. Now let's talk entry. Let's look at this in even greater detail with some charts. The first is entry. Where or how do we even enter these trades? So there's a couple different ways we can consider entries, and that is a simple enter on next candle open concept. So we wait for the divergence candle to close, and then we enter on the next bar or candle open. Another method is to wait for a candlestick confirmation. That is, we wait for a bearish candlestick or an engulfing or some type of reversal candle pattern for shorts, or some type of bullish candle or bullish engulfing pattern for long positions. Now we have to discuss the least fun or exciting aspect of trading, but by far the most important. That is stop losses or risk management. One could argue all day the best place to put a stop loss, but let's try and keep things simple and objective. For a stop loss with this strategy, we can place our stops just above the bearish divergence patterns or just below the bullish divergence patterns. Now in this example, we can see that the second turning point or the point of divergence can act as a minor resistance point from which price uses to retrace, and we are thus protected from being stopped out too soon. So now we've covered entry, we've covered stop losses. Let's get to the fun part of trading, and that's profit taking, where to place our profit targets. So our first goal is to make a profit before the market turns against us. We don't need to shoot for the moon, so we don't want to place the profit target too far. It's wise, I found that it's wise to place the profit target at significant areas of support or resistance, or what I like to call price structure. This keeps us from guessing an arbitrary amount of ticks or points. The divergence valley up here is a very good place for profit taking. Notice we have very clear price structure at these levels, and price will more often than not likely gravitate towards that area like a magnet. Now, it's no coincidence that prices have a reaction at this level or at these levels. So by taking profits at these levels, we can profit from these div patterns that result in minor trend changes or corrections. And we can make consistent profits based purely on that exit technique alone. But divergence, as we know, can also lead to complete trend reversals. And we want to make sure we take advantage of these trends that can occur, which we'll cover in just a bit. Now, candles. When a candlestick reversal pattern or an opposite div pattern appears, this can also serve as important areas to get out. It signals that the trend is likely reversing or at a bare minimum pausing. So if we see a candlestick reversal pattern that appears close to our take profit levels, but we weren't filled, it means that the price is likely going to reverse there, at least temporarily, and we want to close out part of our position and not wait until the price reaches the full take profit level. Here's an example of that. So here's where we get a long. You can see price lurched up to the valley area, but put in a bearish reversal candle right near the TP level. Price retraced a bit, came back to that level a second time. What happened? We got another bearish reversal. This time it drifted all the way back down to the stop out area. So that's why it's usually a good idea to consider closing part of our position up here and not getting too greedy, try to hold out for those last pips or points or ticks. Now, another great way to trade strategy is just using a MA layover, moving average layover. Here I've added an 8, which is the fast EMA, the green line, and a red EMA, the 34 EMA, the red line or the slow line. The first look at this example shows that this candlestick reversal right here would have been a solid place to exit. And hey, I'm not complaining about this. Not complaining, our first target was here. There's a lot of money to be made right here, but there's room for improvement. Notice how that the price traded into those EMAs, rejected or bounced, and the trend continued back to the downside. We have a chance to re-enter the market and continue to ride the trade lower into profit, all by stair-stepping our stops above the swing highs along the way until we either stopped out by a reversal or a MA cross or wherever other risk management we're using. So now you've seen a handful of examples of how to catch quick moves happening after divergences. But the most popular approach that I see amongst traders is they want to exit at a certain number of ticks or points or pips. But most of them are doing it the wrong way, because as you know, every market and every time frame have different volatility. So it makes no sense to go for an arbitrary 100 pips or 5 points on the S&P or $7 on a stock and so on, because volatility changes over time, and it changes over time for each instrument. So the best way to determine our exit is by testing the strategy and learning that individual market's movement or rhythm. But that's really time consuming. There's easier and less subjective ways. So let's quickly recap exit strategies that work for these particular setups. The first one, structure, plain vanilla structure, valleys and dips at significant areas of support resistance. Candlesticks, if we have a candlestick reversal pattern that appears close to our take profit levels, that's where we exit. And then we can exit our balance at the MA crossover or however you choose to manage your position. I want to quickly cover false divergences. How do we filter false divergences? Because I know that's on everybody's mind. And I know there's a lot of people out there that say, well, divergence is subjective. Well, hang on, because I'll show you. We know that when traders are trying to jump in a new trend, they typically want some confirmation. And we know that a trend reversal can be confirmed with a divergence breakout. And to many traders, that divergence is confirmed when we have that minor support or resistance levels that are broken. So let's take a look and see what that means. This is where we're looking to get short, and this is where we're looking to take profits. This is where we're looking to get long. This is where we're looking to take profits, as opposed to buying here and as opposed to selling here. There's nothing wrong with this, but with this approach, the entry can be too far away from the start of the move, and the risk can be too high when compared to the profit. And our goal is to limit risk. Do you see the risk when we're selling up here, our stops here, when we're buying down here, our stops right here? We don't say that this entry technique is wrong, but there's a way to achieve more consistency. Where most traders are looking to enter, we are looking to take quick profits. Now, I also want to remind you that sometimes the MACD histogram looks choppy, quickly reversing up and down, implying that the market is in chop zone. I hear people all the time looking for some magic holy grail chop indicator. This is all you need. It's free on your platform. It's very clear. Chop, trend, chop, trend, chop, trend. Because when we have this choppiness, it can generate a series of false signals. How do we help eliminate that and help prevent over trading? Well, we found a way to recognize more clear patterns. Our golden rule says that the signal line must be crossed by the two peaks. Look at chart 1 on the left. See how we have the peak, the signal line crossed below the zero line and came back up to the second peak. Now look at chart 2 on the right. There's no crossing of the zero line. We stay above the zero line the entire time. Now back to entries. Our goal, again, is to enter as soon as possible after the div pattern has formed. Our strategy, take a note, gives a signal just after the MACD hook. After the MACD hook, or what I call the turning point. Only after the MACD hook has formed, you will recognize that the second peak on the MACD histogram, this is where we recommend to enter on the next candle open. A very simple, a very mechanical rule. But I have further fine-tuned this into an even more reliable method. That's by using trend lines. So when looking for a long signal, I draw a simple minor trend line on the chart by connecting the minor highs. We place a buy stop order just above the trend line. Then when we look for a short signal, we draw a trend line on the chart by connecting the minor lows. We place a sell stop just below the trend line. When the price breaks the trend line, we are in. This entry is very similar as the quick entry next candle on open technique, but sometimes it protects us from the false MACD hook when the MACD turns and continues to fall. So it's a little bit more discretionary, I guess, but to me, it's the most effective way to enter on these div signals. And here's just another quick example, but this time to the sell side. We place a small trend line on the chart and we enter on a sell stop or confirmation retest on the trend line break. I'm a huge believer in trend lines, and I'll show you some real world examples of today's action so you can see it in perspective. Let's recap everything. You've learned high probability strategy, where to enter, where to place risk, where to take profits, and how to filter false setups. But how do professionals trade it? Have you ever wondered why the market turns against you when you jump on a promising new trend or trade? Usually the most tempting signal is a trap. As no more buyers are there to move the market, the sellers step in and dominate. As there are no more sellers to move the market, the buyers dominate. But divergence masters know how to enter in the opposite direction just before the trend turns. And that leads me to this quote. It's a quote I love. Disregard the majority opinion is probably wrong. So yes, following the herd may have worked sometimes. Think of the 90s tech bubble, worked until it didn't. 2000s real estate boom, worked until it didn't. Crypto mania of the 2010s. But do you really want to be the one chasing new highs when you have a high probability of strategy of selling them, or panicking at market lows when you could possibly be buying at substantial discounts with much lower risk? Look, I'm not chasing GME. I'll just throw that in there. So when you trade this way, our winning batting average could be sub 50%. Yes, you don't have to be right 50% of the time, even 40% of the time, when our risk reward is overwhelmingly skewed in our favor. But here's some additional pearls of wisdom. Remember, the less you trade, the more money you'll likely make. We want to filter the unreliable div patterns and focus only on the strongest signals. We want to use a customizable indicator that can deal with this for us, where all the process of recognizing the pattern in the chart is done for us automatically. Then we sit back, enjoy the various exit levels, and find out what suits our trading style the best. But Silas, how do we do this? How do we do all this? Well, it largely depends on your style of trading. You can scalp on the lower time frames. You can swing and position trade on the higher time frames. You can trade as many stocks, futures, options, currency pairs, ETFs, whatever you want. But the key is being patient, avoid over trading, and exercise patience. But Silas, too many markets, too many time frames. I don't have enough time. I understand. I fully understand. But we've now developed a time-saving solution so that traders can live their lives, not worrying about scouring through thousands of symbols, dozens of time frames, and scrutinizing hundreds of charts, trying to determine if what we are eyeballing is actually divergence or not. We've cracked the code and simplified the process. But how? Who is ready to start trading like a professional, thinking like a professional, treat trading like a business, and stand out from the crowd? Let me see who's ready. I'm gonna take a swig of water. Bye, Norm, good to see you. Ed, Alabama grad, awesome. What year? Never ate breakfast at Series, but I had drinks sometimes. All right, absolutely. Absolutely. All right, well, I'm pleased to introduce the Divergence Dominator Pro package. It's time to automate this process. DD Pro is a fully complete, comprehensive trading business in a box. Let me quickly guide you through what the Div Dominator Pro package is so you can immediately see how it can benefit you in your trading. But what all do you get? Sir, what is it? It's a great question. Great question. Glad you asked. You're going to get the turning point identifier indicator, what I call the TPI, the DD Pro scanner, price action pro trading course, candlestick recognizer guide, divergence cheat sheet, DD Pro trade journal, and the TPI fast slow line cheat sheet. Well, what is all that? I'm sure your mind is probably blown. Let's talk about it. Turning point identifier indicator. It auto plots divergence setups for you, scanning the market, locating these high probability turning points on your behalf across multiple markets and multiple time frames. Who's ready to see this? Well, let's look at it. This is the turning line identifier. This is a daily chart of IBM. This is, you can see the bullish divergence line in the bullish T.P.I indicator, bearish divergence line, bearish T.P.I indicator. You can now pull up your favorite chart, attach the T.P.I indicator in seconds, and bam, you have these high probability turning points on your behalf. Here is another chart on the daily chart of the US yen, bullish T.P.I indicator, bearish T.P.I indicator, bullish T.P.I indicator, bearish T.P.I indicator. You can now at a glance see major reversal turning points on any market or any time frame of our choosing. Here is a 5-minute chart of the British pound, 5-minute chart. Here's our bullish T.P.I. Here's our bearish T.P.I. And everybody see that T.P.I in action. What about platforms? How about Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4? Here's what it looks like on Thinkorswim. Notice that we have our bearish T.P.I signal down here below, bullish T.P.I signal below. What does the market do? Shoots higher. Bullish T.P.I signal, shoots higher. Here's what it looks like on TradeStation. Here's our bullish T.P.I, bearish T.P.I. Here's what it looks like on NinjaTrader 8. Bullish T.P.I, bearish T.P.I, bearish T.P.I, bearish T.P.I, and so on. Here's what it looks like on TradingView. Bearish T.P.I, bullish T.P.I, bearish T.P.I. And then lastly on MetaTrader 4, bearish T.P.I, bullish T.P.I, not a signal there, and we had a bullish T.P.I right there. DD Pro Scanner now scan through hundreds of symbols on multiple asset classes and multiple time frames. We don't want to locate those setups manually. Yeah, it's fun if you've got unlimited time on your hands. So if you've been trading for any time, you know that these patterns are reliable and profitable trade setups. But manually identifying these are very difficult. They're time consuming, especially when you're analyzing multiple markets and time frames. And that's where the T.P.I comes into play. It automatically detects the highest probability divergence for us with the click of a button. And here we have the scanner on TradeStation, and then NinjaTrader 8. And I failed to mention, this is a top secret. I'm just kidding. We have the scanner built for Thinkorswim. It is available, but we're still working on a couple of tweaks. But TOS is now available. So combined, the T.P.I indicator scanner is capable of identifying divergences, all asset classes, all time frames, chart types, scalpers, day traders, swing traders. But aside from the indicator scanner, I really feel like the crown jewel of this package is my Price Action Pro trading course. This is a never before released course. You're going to get access to a 10-part on-demand course with all the following. It's my only full-step A to Z training course focused on trading pure price action, how to find and identify the most important areas to even consider being a buyer or seller, completely removing the uncertainty, all by trading in conjunction with the T.P.I. So do you want to quit guessing? You want to feel confident, remove your emotions, begin to think like a professional, scale your reward versus your risk, and have a solid trading plan? Then if the answer is yes, the T.P.I indicator for the 5 platforms, the scanner for the 3 platforms is very important. But the PAP course jumpstarts your success because it answers all of these or addresses all of these bullets. Because everything I talked about is no secret. Divergence has been around, known and used for decades, but now not only do you get a first of its kind tool, you're going to get an indicator that locates high probability turning points on your behalf. The PAP course has all the solutions here, and it's available in the members area on demand. You're also going to get the Candlestick Pattern Recognizer Guide. It's not your grandma's guide to candlesticks. We all know what candlesticks are, and there are dozens out there, dozens of formations. But this guide is short and sweet, only covers the most important patterns that you should focus on. You're also going to get the divergence chart pattern cheat sheet. This is something you could also download and print for those that like written descriptions and summaries. but can also accompany the video modules. So with the Divergence Dominator Pro, you're going to get the T.P.I indicator, the DD Pro scanner, the Candlestick Recognizer Guide, the PAP trading course, the Divergence cheat sheet, and 2 additional bonuses. So I want to ask you, what is all this worth? What is all this worth? DD Pro does all of the hard work for you. If you are now able to profit in any market conditions, if you can anticipate major market reversals or turning points, if you could trade on your time, scalp, day, swing, position, if you now had all the tools, scanners, indicators, videos, and training guides, what would that be worth? But I have to ask, is this a fit for you? And you have to answer this. If you like scalping on nanosecond charts all day, if you love to be stressed out and have heart palpitations and break out in cold sweats, if you get a thrill of blowing out accounts over and over again, if you have a gambling mindset and don't have a clue where the market is likely headed, probably not for you. No worries, we can shake digital hands, part ways, and I wish you the best. But if you're ready to think like a professional, you're ready to remove your gambling mindset, and you're ready to get serious and treat trading like a business, and you're ready to kick your emotions, then this literally could be for you. The Divergence Dominator Pro package. We had all these indicators built out, over $2,000. The Pro Scanner was over $1,500. Price Action Pro course, $500. All the cheat sheets and guides bring the additional value to $4,427. But I'm very proud of this indicator, the PAP course, all of the educational material. I want to only get these out to the serious traders out there, those that are tired of kicking tires, those that are sick of jumping endlessly from system to system, those that are ready to remove emotions, and most importantly, ready to take action and see real results. We're not going to charge $4,427. I can charge $2,999 or even $1,999 or $997. As part of this live webinar special, we are very pleased to offer this to the first 25 signups, a single one-time fee of $397. Yes, it's a one-time charge of $397 for the first 25. Why 25? It's not some gimmick or marketing trick up our sleeve. It's because we actually take care of our students. That means personal VIP email support. I personally will answer you, or my tech guy will personally answer you. We'll log into your computer, help you install, answer any questions. We're with you today and in the long run. The offer link is seasonalswingtrader.com/pro. I'm gonna put that into the chat for you. seasonalswingtrader.com/pro. You should see that, Edwin. This is 90% off the $4,400 value. You get the indicator suite, the scanner set, PAP course, guides, cheat sheets, for a one-time fee. It's no renewal, no subscription. You're not going to get dinged in a quarter or a year or 5 years from now. You own it for life, as well as any updates that are included. I often get asked, Silas, how do you trade these setups? Great question. The easy answer is that it really depends. Depends on the setup, my outlook on the markets. Do I have a shorter term outlook, intermediate, more longer term, what positions I have on, the risk reward. But I like to trade credit spreads on equities and commodities. I will trade debits as well as credits. I also trade the underlying on both futures or commodities and FX. But let me say that what or how I trade really doesn't matter. Frankly, you should never be concerned with what I am doing, but you have a question, an idea, shoot it to me, whether you become a member today or not. I love hobnobbing with you folks. I get some of my best ideas from you. What do you think about this? What do you think about that? Hey, this isn't working. Why? Shoot it to me. I'll answer you personally. But at the end of the day, you are in control of your own account. How much capital you have, your knowledge, your risk tolerance, how much time you can personally commit. Look, we're all different creatures. We treat the markets differently. We trade them differently. We have different objectives. We have different account sizes. So it's very important that you, if you want to treat this like a business, You take ownership, but this is a business in a box, trading business in a box strategy that you can use for years to come. And although I am very proud of the T.P.I indicator, what is in this Price Action Pro course right here, you can use that and take that and run with it and use it with any strategy you're currently using. It's going to teach you a methodical, top-down approach on how to look and view the markets day in and day out, whether you want to trade the higher time frames or the lower time frames. I've got a boatload of questions here, so I want to appreciate everybody's patience. And need a slower presentation? I'm sorry, Rob. Reg, that's awesome. Awesome story. T.P.I is a it's a proprietary indicator, but it uses the methodologies that we just talked about, what I just talked about in the presentation, MACD and divergence strategy. Yes, the line colors and the thickness, as well as the arrows, are adjustable. And I'll show you some. I'm going to show you some charts. We'll get to the charts. I will actually. I'll show you the members area too. I know folks like to get kind of a sneak peek of the members area. Let me try to bang through some of these questions, get caught up. Not available for WC. It's not for interactive brokers either. It's these 5 platforms right here. If we add any, we'll include that. Does not use the hidden, no. Does T.P.I work for day trading? Yeah, Frank, it does, and we'll look at some charts today. We'll look at the the popular S&P, crude, euro, pound, gold, bonds, things like that. Have you a setup that suits Vector Vest? I've heard of Vector Vest. I'm not sure how that would be incorporated. It is, Ben. I don't have a PayPal option built, but if you email me at support@seasonalswingtrader.com, if you email me at support@seasonalswingtrader.com, we'll create just a manual link for you. Looks like 9 units have been taken. My support guy had him stand around, make sure that everybody was locked and loaded before we head into tomorrow. No, this is not an end of day system. You can trade it as an end of day system. If you trade the daily charts or the weekly charts, where you're only looking at it once a week, but it's all time frames. So whether 1 minute, 5 minute, 10 minute, 4 hour, hourly, daily, weekly, does not give an alert or warning that a signal is imminent. It will just print once you get the pattern. I'll talk about the T.P.I line when we look at the charts. Would I recommend the DDP for scalping or day trading? We'll look at charts and you can make that determination. I think it works great if you want to scalp. I know scalping and day trade are not everybody's forte, so it works equally as well for swing trading, and I do both. This does not repaint. How accurate is it? And you're not being rude. It's a great question. I think that the accuracy is great. You can load up the charts. It doesn't repaint, so you can go back and back test it. I don't trade it like a green light, red light system, and that's probably turns a lot of you off, but unfortunately, that's just not the way to treat trading. It's not a red light, green light system. You'll see the plots, and I teach a very unique and specific strategy on how to trade T.P.I using price action. But I know some of you have no interest, you don't care, and you just want to trade the arrows, I would say try to wisen up a little bit, put some more thought behind it, at least use some trend line analysis or be cognizant of the market environment. But the point is, we don't have to sit there and think about it for, you know, hours and minutes and, you know, just dwell on, well, is this? No, I mean, that's not what it's meant to be. It's there to give you very clear bias, but we want to trade in confluence. I don't care what you're trading with. If you're trading market profile or Gann or Elliott wave, whatever it is you're trading, you always want to trade with confluence. So here's the Divergence Dominator Pro package. This is a glimpse inside the members area. Here's your all of your indicators. Here's your scanner. Here's your installation guide. Okay. Here's your Price Action Pro course modules, all right here. And then here's all of your resources and bonuses, your guides, PDFs, and then your spreadsheet. You can load intraday time frames on the same instrument. Yes. So one way that I personally trade is I prefer to trade multiple time frame analysis, looking at top down, weekly, daily, 4 hour, daily, 4 hour, or 4 hour, hourly, and so on. Howard, I do not have that PayPal link, but you can email me at support@seasonalswingtrader, and I'll hook you up with a link. Yes, Top Scanner is now available. We're still making, you know, still kind of, it's ready to my, you know, as far as I'm concerned, but we're making some tweaks, and any kind of enhancements, improvements, things like that will be updated. We'll send an email out and say, hey, you know, blah, 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 check this out. Anything else we add, if we're able to make a scanner for, you know, TradingView or MT4, I don't think that's possible. You get all that. Or if we say, hey, we've added some cool new widget, you know, to TradingView, so on and so forth, we will send out an announcement. And I will give you a little bit of insight for those that are curious. My programmer is working on a indicator. We're starting with TradingView, and then we'll roll it out into the other platforms. So let's just, while we're here on this DVA, I was looking at this earlier. So we had a sell signal right here. This is why I just like this trend line confirmation. Here we had another sell signal. Here we had a buy signal. Depending on how you draw your trend lines, it's not necessary. But those trading credit spreads are just milk and premium along the way. Here we had a trend line, and then we finally broke. So this is your T.P.I down here. These lines are your T.P.I fast and slow lines. And somebody asked if you can change the colors and the thickness and all that. So you could change, you know, arrow size, your colors, and all of that good stuff, thickness, so on and so forth. So where I was going is that we are building, and then we will simultaneously test that. What we're looking at is when we get a print. So if we get a print, like this is a buy right here, we're working on building just price levels. So let's say that when we get the arrow print, we'll have a stop loss populate and 2 targets. So the stop loss, remember what I just showed you, will typically be right below the swing low of where we got our divergence. But instead of just saying a point or a tick or a penny, whatever instrument it is, this stop is going to be an ATR multiplier. So I know that sounds kind of crazy, but it's just an average true range. And that way it will be congruent across what market you're looking at. If you're looking at a daily chart of the Vita, your ATR is going to differ from that on a 5-minute S&P chart. And so the average true range will be, you'll have the ability to manipulate that based on how you want to. So it could be a multiplier, just a standard ATR of 1, or if you want a multiplier of 2, so 2 times ATR to give you a little bit of buffer. The profit targets are a little bit trickier because there is discretion, right? There's no absolute hard rule on targets, but where we want to take profits, remember, are areas of price structure, significant areas of support, resistance, or the valleys or the dips that we talked about. So if we're looking to get long here, where's the next area that you see? Right here, right here. So we're trying to code it to say on a long, profit 1 will be last swing high, and then profit 2 will be 2 swing highs back, if that makes sense. And then opposite for the shorts. Yeah, S&P. So I like the 10. Let's go to continuous. Go. Man, we're rallying hard now, only down 18 points. So today we had, today was one of those just pounding sell-off days, right? So we had a 10-minute buy right here that was, 92 up to 3,800 or so, like maybe 8 or 9 points. And what I say is, like, if you're not getting enough signals, so like if we come down to look at a couple other markets like the pound, we had a nice buy there. Euro, we had a buy right here. Just depends on where you're placing those. Crude oil, we had a nice buy right here. But if you feel like you're not getting enough signals or opportunities, whatever you want to call them, just drill down to the lower time frames. So we have, like, for those that I have a specific question about scalping. So here's a 1 minute. This is all in the after hours while I'm talking to you. Let's go back in the trading day. So we had a buy right here in the last hour, trying to buy right here during this market selling off. We had sell signals, but if you notice that you just respect the trend, it's not calling the absolute top, but it's likely catching a reversal point. See this here? Nice scalps there. Let's go back. Nice sells right here. There's the arrow right here. It's just as very literally as simple as doing that. You don't have to. Maybe you can eyeball it. I like to just draw a trend line. Nice moves here. Arrow occurred on this bar right here. Trade to the downside right before the cash opened. We had a buy right here. Trades to the upside. Tons of opportunity there. Gonna go back to crude, look at 4 hour. Yep. Crude 4 hour. So that should answer your question about day trading. What did I do? The heck did I do? Lost my. What happened there? I guess I deleted it somehow. Yeah, let me add it back. Let's see. All right. That should be it right there. All right, so some nice sell signals here in crude. 4 hour on the S&P has caught some really sweet shorts lately. Here was the last sell signal in S&P. So you trade like mini S&P options. Nice sell to the downside. Nice sell to the downside. Sell to the downside. Sell to the downside. Sell to the downside. We had 1, 2, 3, 4, 5 signals on the 4 hour since mid-December. GME, yeah, I knew somebody asked me about GME. Let's look at GameStop daily. All right, so crazy market. Let's try to expand this so we can get a little bit better view here. So we had a buy here, we had a sell, dip to the downside, sell, dip to the downside, sell, dip to the downside. We have no buy because we're not making lower lows, right? EQIX. All right, so let's go back here. We would sell, sell, buy, sell. You can see how very consistent they are with just trading these little trend lines here. Again, I know some of you don't use them, that's fine. Our last buy was right here. So, you know, if you're trading credit spreads or buying just outrights, it's a good process. How's T.P.I compared to the SST? I'm not sure what that means. Would you be able to use it on Interactive Broker desktop platform? No, we don't have it coded for Interactive Brokers, but you can use it on any new, myriad of free platforms, which I believe you could open up free accounts or very minimal amount in each of these, and then execute and trade off of IB or whatever your platform of choice is. No, not IB. I used to trade huge block orders on Interactive. It's great for execution, but terrible charting platform, in my opinion. Dan, yeah, we can provide assistance with installation. It's pretty straightforward and easy, but I'm not a tech guru myself. So hey, reach out. I don't blame you, but maybe take a minute, look at the installation video. It might be 5-10 minutes long at most. Pretty simple setup. But if you're having problems, just reach out to us. Our email support is support@seasonalswingtrader.com. Just say, hey, need help installing it on Ninja or Toss or wherever. You get access to all these. You get access to all these platforms. You don't have to let us know what you need. You'll see all of them right there, just like I showed you. What is the success rate? Depends on how you trade it. I mean, it's an impossible question to answer. People really like asking that, and I'm not picking on anybody, but what is the success rate? Well, let's say that we took this trade in Adobe. Well, where you entered could be different than me or Joe or Susie or Billy or Bob. How you manage your risk could be different. Where you took profits could be different. Maybe, what if I'm taking profits right here from a move from 495 down to 455, but then you're still in it and then the market gaps up tomorrow. You chalking that up as a loss or a gain. It's all about where you enter and how you manage your position. This is not a recording. Yeah, you download the indicator onto your desktop and then you import or install onto your trading platform. Risk reward is we always try to do at a bare minimum, 1.5 to 2 to 1. So that comes back to focusing, unless you really have a trained eye. This does a lot of the work for you, right? I mean, this is scanning, locating, plotting high probability turning points in the market. Now, when you go in and back into this trade, then you'll want to say, well, does it meet my risk reward criteria? You should at least be looking for, I mean, at very least a 1 to 1, but preferably a 1.5 to 2. But you'll notice when we have these setups, here we have a sell setup on Boeing. Let's say that I'm going to get short Boeing on, we have our signal. We had a break of the trend line, so I'm getting short 48 on Exxon here. I know my risk is going to be, if I'm getting short 48, my risk is going to be up here around 52. Give a little bit of buffer above the high. So 48 to 52 is $4. 48 minus 4 is 44. That's my first profit target. And notice how that lines in right here with last area of resistance, and it also tags the 200-day. So that's a 1-to-1 risk reward ratio, but I like this area. I like this area down here at 41.5, 42. Right here. And this is not hindsight. I just picked this because somebody typed in Exxon. So here we have buy signals. We broke the trend line. I'm getting long here around 34. I know my risk is going to be below the swing low at, we'll call it 30. So long at 34, stop at 30. It's $4. Well, 1-to-1 risk reward ratio is I'm going to add $4 to 34. That takes me up to 38. That's right here at this little minor area. But I'm ultimately targeting this guy up here. This is the last major swing structure. And look at what happened. Boom. So $10. I'm risking 4 to make 10. Again, the risk reward is all about how you place and manage the order. And it'll vary depending on time frames and markets and volatility and conditions. Judith, great question. Do I have any plans to add alerts to the T.P.I? I would love to be alerted from the platform. Still trying to figure that out. Right now we have like scanners and things like that going on. As far as like pushing out or popping alerts, that would be my dream, right? So I don't have to sit there and babysit and look at this. I mean, I'm here looking at this all day anyway, and I enjoy it. But it would be great for when you do step out and step away, you get alerted to the high probability situations. My guy said that we have sold 19 units, and before we head in tomorrow, and as we deal with tomorrow, he's probably going to be checking out for the day. I just want to make sure everybody's taken care of, and that's why we limit this, because we want to make sure we help everybody that needs help. As far as if you need help with installation, things like that, that will have to be tomorrow. Do I incorporate seasonality? I absolutely do. I'm a seasonal swing trader after all. Now, I'm not gonna, when I see these setups, I'm not gonna put 100% into based off seasonality or the T.P.I. I'll talk about a couple of trades that we're in based off seasonality and the T.P.I. Actually, I'm not in this trade. I exited yesterday. This is a trade based off seasonality, Hormel Foods. But look, why did I get long? Well, I know because of the seasonality factor. I think there was a trade around this time period that had an 87% win rate. And what else do we have? Nice little bullish T.P.I. here. Another trade that I took profits on today was Charles Schwab. Why? Had a high probability seasonal sell setup and a high probability T.P.I. sell signal. Dash and Ripple. Alrighty. Currencies. Oops. Crypto. Dash. Daily. We had a sell in November. Sell in December. Ripple, XRP, trading at a big old quarter. Don't see anything. Let's look at a 4-hour buy. So yeah, to answer your question, it will work on cryptos too. So there we have a buy on that nice trend line break to the upside. Last buy hadn't really done much, not done anything exciting. 28 cents up to 33 cents or whatever. Woohoo. Can you do a hog chart? Man, yeah, let's look at hogs. Continuous. Look at hogs. Daily. All right, let's look at the actual front month, so we have something better to look at, because this is a continuous. Let's go to logs. Yeah, if the page isn't working, that means it's probably done. Email me, support at Seasonal Swing Trader. I'll try to work with you tomorrow. Let's look at May hogs. All right, so so if I saw this and I didn't see this, my natural inclination is just do simple trend line analysis. Then we get a nice break, targeting down here, targeting right here. Why? This is the last area where the market took out these swing highs and caused new highs. Targeting this area right here. Okay, now we have a buy signal right here, and we have the price action is a little sketchy because we're looking at May 2021. It was not the front month, so you're not going to see all that volume and liquidity right there. But if we're getting long here, first minor targets are going to be here. Second minor target are going to be here. And look, man, I had no idea what that was going to do, but look, boom, reject. I don't know. I would say it's a buy right now. No. Hey Keith from the Scottish borders. Don't have any talks with on wealth charts right now. We'll certainly explore it. I do have a cheat sheet, yeah, on the T.P.I fast slow line cross. You'll notice that the divergence arrows or the divergence signals are going to provide, really they're the key basis behind the T.P.I, and this is a confirmed T.P.I. The fast slow line, if you want to think about it, maybe like MACD, or if you want to really think about it, maybe like a moving average. I wouldn't compare it to that, but you can think of it operating like that. So there's a fast and slow, and sometimes they will provide opportunities to get in earlier. Sometimes they're a little bit lagging. I like to see what they're doing and trade in line with those. And if I'm in a position, I will oftentimes go to a lower time frame and see. I'm not saying I'm managing my complete risk or my stop off this, but if I see that these start to turn, I'm certainly taking notice. And we actually working on a scanner in TOS that will alert you when we do get across. Because you'll see in TOS there's little green arrows when we do cross, or not, green circles and little red circles. That's just really for those what I call action junkies that really want to trade every flip and turn. I would focus on the div signals first, though, if I were you, and then look at maybe incorporating that if you want more action. There's no automation at this time other than just the scanner, going out and finding, locating the signals. But believe me, we talked about it, working on it, and we'll keep the options open. What is the lowest price stock you find? I don't know. I mean, I haven't really scanned any lower price stocks. I have to go to my other computer and scan something, like penny stocks or something, if that's what you mean, but I don't do that. I'm really looking for stocks $20 a share or greater that are have options on them. Not on Tastyworks, no. Signals appear on the close. The scanner, so I'm on a computer. I'm not running Thinkorswim right now. I'm not running Thinkorswim, but you can just think of it, the scanner working as any other scanner. You run the scans based on your time frame, based on your instrument list, hit scan based on those conditions that you have, and it will populate the results. Yep, you're welcome. Look forward to working with you as well. Yep, get access to all platforms. We no trade room. Yeah, so this came up another time too about binaries. So if you pull up a chart and you look at the available, I'm thinking more US based people right now. I don't know where you're at, but for the US, like Nadex, you know the instruments that they have, you know, most of the majors and the indices, and what else do they have? Nat gas, soybeans, copper, crude, corn, I think, silver. You know, if whatever time frame you're trading on, it's working really well on a 10-minute chart. So to trade binaries, of course, if you're overseas, some of those binary brokers, I don't know, you know, which ones are reputable, which ones are not, or regulated. If they are, I think you can trade, you know, equities and things like that on those binary platforms, equities and probably other instruments. So yeah, just something you want to take a look at. It's a one time. Yep. Soybeans. All right, so soybeans, when we've been going up, what I want to do is, what I like to do is go to 4 hour. You can see we're making highs. We're clearly, you know, attempting to make a top. If you go down to 1 hour, so we had maybe buy there, maybe sell there. So I would say this one would be a loser, you know, break here at 1352, stopped out at 1340, and then here, you get short on that break there at 1385-ish. Maybe targeting down here at 1340, but you know, you've got a little bit of price structure running into 200-day, so on and so forth. BNY, yeah, one more here, we'll wrap it up. BNY. So you can see I've been analyzing BNY. So we had a sell on 120 and a sell on 723 and a sell on 518. You're welcome. All right, well, we're about 30 minutes past the hour. I told you I'd be here for about 60 minutes or so. Oh yeah, yeah. So this is based on divergence, Shaw. You're referring to another indicator that also looks for tops and bottoms reversal points. Work a little bit differently, but at the end of the day, it's still price action. So yeah, I do use both of those combined. Absolutely, that's what I mean when you have the confluence there. The 1, 2, 3 top and bottom patterns in conjunction with the divergence buy and sells. That's a pattern that I'm really interested in and a market that I want to jump on board. Yes, it is lifetime, as well as any updates. I'm sure we'll be making updates as I continue to get your feedback. All right, guys, I don't know where we're at here. If you have problems, shoot me an email, support@seasonal swing trader. My tech guys will try, we'll try to do something, work with you in the morning, take care of you there regarding the order form or being locked out or things like that. Email us at any time. We'll be happy to answer you. I'll go in and answer some of your questions right now, and then we'll get to the rest of them tomorrow. Overnight trades. Yeah, you can trade and hold overnight. Yeah, me too, Frank. Toss scanner is already there in the members area. Right here, it's already here. There's the study the 3 studies there for Thinkorswim. Right now, we just have the installation guide for the T.P.I buy sells. I'm trying to work on an installation guide for the T.P.I fast slow line. It's not rocket science. I just need to get it in there for you. It is lifetime, yes. Pay $397 a year or more ago. Well, I'm not sure what product that was. This is Divergence. This is a Divergence pattern. I mean, the Divergence Dominator Pro package, separate product. All right, thanks guys. Yeah, you're welcome. Appreciate everybody joining. Hope you learned something. Hope you're excited about it because put a lot of work into it. Very excited, and I think more and more good things will come. Note that the Stevie Pro scanner also includes Thinkorswim. I just need to update the slides here. So everybody take care. Good luck out there. Good luck trading. Stay healthy in the markets and in your personal health. Take care and look forward to seeing you on the inside. Talk soon.